Hello, this is Ahura from OTET Market. We'll be with you with the global economic outlook in the week ahead, which is going to be the 36th week of 2024. As always, let's first check what we had last week, and then we can see the data in the week ahead and our expectations. Last week, generally, we had a busy week with too many data and information that could. Okay, let's put it here. That can help us to understand what's going on, what can be happening in the week ahead. Starting from Monday, last week on Monday, we had the durable goods orders from United States, which increased by 9.9%, but it was not such a good data because if you go and check the details data, then you can understand that most of this increase was because of the aircrafts, and that if you exclude the aircrafts and transportation, you can see the decline of 0.2% in orders, and that cannot be a supportive number and data for in manufacturing sectors and generally for economy. Later on Tuesday, we had CB consumer confidence from United States, which increased from 100.9, 100.1.9, 101.9 to 103.3. Sorry, and that put the suffer that caused the U.S. dollar to a little bit increase and lowered the possibility of 50 basis point rate hike by Federal Reserve in a September meeting. Generally, that can make the kind of the doubt on what can fit the sun and put the make it a little make this decision a little bit more challenging for policymakers in the United States to decide whether they cut the rates by 25 basis points or 50 basis point, which if you mix this data with other data, compare with this data with other data, and you get the mixed data from different parts of economies. Generally, the data we had last week from United States, they were a little bit positive data. If you go and check the GDP, you can see the GDP increased by 3% in the second quarter in the United States, which means that the economy is improving, which well above expectations. And then if you'll check the personal income and expectation, personal income and spending, and also PCE price index, you can understand your Americans income increased by 0.5% and they spend 0.4%, which both of them they were better than previous month. At the same time, PC price index and core PC price index fell to the 2.5 and 2.9% as that was here. PC price index and core PC price index here. PC price index fell to 2. And both of them they didn't change at 2.5 and 2.6% that they had last week, but and both of them they were less than expectation because the market was expecting to see them at 0.1% higher compared with the previous month. But both of them they increased by 0.2% generally in line with the market expectations. Out of the US, in Canada, we had the GDP numbers as well. We could see that the GDP in Canada increased by 0.9% in the second quarter in annual scale, and the month in the quarter scale, in the quarter per quarter, it increased by 0.5%. It was not a surprise. We didn't have a surprise in the markets in the Canadian data. Generally, with this data, we can expect that the next week, when Canadian Central Bank will have a meeting, most probably that will not that will cause the great cuts in their expectation. Sorry, I just let it. I just my dog a little bit cut it. Sorry, a little bit. My dog had okay, it just made us a little bit voice. Sorry for that. Yeah, that most probably will cause that the Central Bank of Canada to cut their rates by 25 basis points in next meeting that they're gonna have it next week. Generally, the data which we had last week from other economies, especially from Germany, we saw that the German economy increased, but it did not increase. It was flat in the second quarter, as in the data we had on Monday. and business expectation fell a little bit. They even thought they were better than expectations, but from 87 it fell to 86.8. It means that the business expectation still is weak in Germany. Even thought they were better than expectation, but still the German economy is still suffering. This data means that, and as you see here, the GDP also was flat in the second quarter, while it was expected to fall by 0.1%. On the other economies that we could see the data, review the data. I know we didn't have that much data. Yeah, in Japan also we had some data. Core Tokyo inflation increased to 2.4% from 2.2% that it had, which most probably the Japanese central bank that increased the expectation from the Japanese central bank to increase again the rates after holding previous month. We know that 2 months ago they increased the rates by 15 basis point from 0.10% to 0.25 basis point to 0.25%, and most probably that can cause the central bank in Japan to increase a little bit rate hike in its next meeting by 0.1%, which is going to be after 2 weeks. Yeah, that was the most important data which we had. Inflation Eurozone also we had for the August. It was a flash data for the August. The inflation increased by 0.2%. It was expected, and unemployment rate fell to 6.4%. But still, this data will not change our expectation from the Central Bank of European Central Bank to cut the rates by 25 basis points in its next meeting. In a week ahead, which is going to be the first week of September, which is September by itself is the last month of this third quarter. It's a very important month and it's a very important week as the markets are coming back from the holidays. It was August holiday, the summer holiday is ending, and now the market participants, investors, and the traders are coming back to their work, to their job, and their businesses. And most probably that will have cause much movements in the market, but still, as we know, traditionally September is not such a positive month for the stock markets, and generally 0.1%, it's about a 1% fall we can see mostly generally in the September months, since the data recorded if we go on average. Next week, the data from United States, mostly the focus in United States mostly will be on labor market data, but still on Monday, I have to mention that the Monday is the labor market day, it's a Labor Day, and the market will be closed on Tuesday. We will have the ISM manufacturing on Tuesday. Yeah, we have ISM manufacturing data, which is expected to stay under 50 level, but increase a little bit from 46.8 to 47. The ISM PMI data will publish on Thursday again for the service sector and the composite sector, which is expected to increase a little bit better above 50 level, which again will show that the service sector is still better than manufacturing sector. But still, the focus will be on Tuesday's JOLTS and then Thursday's initial jobless claims, and finally Friday on labor market on NFP numbers. After 114K newly created job in July, in August, we're expecting to see somewhat about 150K and 163K newly created job, which means that most probably unemployment rate will fall from 4.3% to 4.2%, and average income will increase by 0.3% monthly and 3.7% on annual basis. That data, if after the positive GDP we had last week, and after PC price index that we had the last week, PC personal income and expectation that we had the last week, which somehow it was a positive. If we had a better labor market than compared to the expectations, then 25 basis point rate cut will be the most possible decision, and it can lead a little bit US dollar a little bit higher and put the pressure on the stock markets. But if we see the much weaker labor data, like 4.3% unemployment rate and the lower newly created job, around 120K, 130K less than expectations, then we can see pressure on the US dollar index and a little bit positive movement in the stock markets. But still, the reason of this positive movement will be the negative data, which means that cannot last long. This possible movement, this possible upward movement. This possible, but still, I don't expect that. And most probably, we can see the labor market to fall to 4.1 or 4.2% unemployment rate in the United States, and we will put more chance for 25 basis point rate cut, and which can increase and support the US dollar and put the pressure on stock markets. That's the expectations. Out of the US, the PMI numbers will be the most focused number during the which we are going to have from most developed and developing economies. We will have this data again from China, European country, and European countries. From the China, we actually had today. Earlier today, we had the PMI numbers. We can see the some service manufacturing increased, non-manufacturing or service sector increased from 50.2 to 50.3 in the service sector, but manufacturing sector fell to 49.1 from 49.4, while it was expecting to increase. But still, for the next week, the data which is going to published from Chinese economy, I will be a little bit more positive about the Chinese economy after the Chinese central bank cut the rate by 10 basis point 2 months, 1.5 months ago, and injected the $81 billion cash into the markets, which can support the data. That's why I do expect a little bit positive data still, and also we know that the tariffs for the e-vehicles that the Canada put for the Chinese e-vehicles will be full applied from October. And that's why we do still have a month to export. The Chinese do still have a month to export to Canada, and do still have a month to import the Chinese e-vehicles, and just not the e-vehicles, everything accessories related to the e-vehicles to the Canada, which can support the export from China to Canada. And most probably the Chinese export, which was 7% increase, which had a 7% increase last month, this month can increase by almost 8.5%. Out of this data, we have only the central bank meeting of Canadian central bank meeting, where we are expecting to see on Wednesday, gonna be the Wednesday BOC meeting, and we are expecting to see 25 basis point rate cut, as the data, as I mentioned earlier, in Canada was not that brilliant data. So most probably we can see 25 basis point rate cut in Canada from 4.50 down to 4.25 basis point. If we check if we check the charts and see what these data means on the charts, this is US dollar chart. Most probably until Friday, when we are going to have the NFP numbers, most probably the US dollar will a little bit increase between 100.1 and 100.2 marks. We do not have any specific or enough reason to put the pressure on US dollar and expect the US dollar to fall. This week, the expectation from the US dollar index is to increase between 101 and 102 before Friday data, and then after Friday data, we can understand what's going to happen. And on other markets, on the gold market, we can see here that the gold most probably gold still benefits from what's going on in the market. Even though the US dollar index increased a little bit last week, still gold didn't fall. Yeah, it didn't increase, but it didn't fall as well. Why? Because there is a doubt on the stock markets. Whether it's true or not, there are some investors and traders, they believe that the stock market is overpriced, and that can cause a little bit fall in the US stock markets, which means more demand for safe havens like US dollar. this about the gold. So that means that the gold demand can increase. This, for us, as I told, for the stock markets, we had the Dow Jones closed almost in a record high, a little bit closed, a little bit lower than the record high, but generally closed higher. The Nasdaq also closed. Nasdaq as a weekly record closed lower, as the tech stocks, they a little bit, they had a weaker behavior last week, as the market, as I told, they think that the most of technology stocks, they are overpriced, and now the time of the saving the benefits. So that caused a little bit sell on the tech stocks, and that helped the Dow Jones as like industrial stocks to increase and put a little bit more pressure on Nasdaq's the index generally. For the week ahead, until Friday, that we have more data to understand what clearly central bank is going to do. Stock markets mostly will be flat, a little bit, get a little bit lower digits before Friday's number, and then on Friday we can understand what exactly is going on the U.S. economy and what we can expect from the central bank. On the other parts, on the oil front, oil last week, as we were expecting, moved between $74 and $80. We do expect for the week ahead also the same number. We are a little bit positive about the oil. The Libya, the condition in the Libya is not, it's not stable. We know the central bank is under control of one, well, just like armies group and the oil. Sorry, and oil industry is under control of a different government. There are two governments in Libya, and they cannot become together, as there are one part is selling and other part is producing. So it's a little bit crazy, but that's what's going on in Libya, which can help hold the tensions in the oil and energy market generally. And also, we now the peace talk between the Hamas and Palestinian, between the Palestinian and Israeli, and it goes nowhere still, and we don't have any reason to say that, okay, there can be the peace, and this peace talk and case fire talk can get the results. Between the Ukraine and Russia, so we do not have any clear sign of what's going on here and if they will start any peace talk or not. That's why the geopolitical tensions has nothing to go, just like to decrease. So the oil cannot fall that much. So even thought if the economic data is weak, but still geopolitical tensions is high, so it can hold the price between $74 and $80 as we expected to see the last week. On the cryptocurrency market, BTC, now the Bitcoin is under 62K, but still it's not under 57K. Under 57, the downtrend can be start between 57 and 62K. We cannot expect any down or uptrend, but generally we can see the market's in a downtrend, and most probably before U.S. election, we cannot see any big rallies in the crypto market, as they're waiting to see the what next government of the United States, how actually next government of the United States going to act against cryptocurrency markets. This is generally what we had in the markets. If you had any other question, please don't forget to write down under this video in website or YouTube or Instagram or wherever you see. I will try to get back to you as soon as possible. Have a good week ahead. Bye.